Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report brought to you in association with Bank of New Zealand. Today I want to have a look at what's going to happen to the $1.6 billion windfall. This is the money the government is going to pay almost immediately to depositors in South Canterbury Finance. Many had expected that money to be stuck in an account at South Canterbury Finance at least for another couple of months, sometimes for a lot longer. Now it's going to be in their hot little hands immediately. What are they going to do with it? Is this going to be another boost for the local economy in the very short term? Are people going to go out and spend it all in a big surge, particularly before the GST hike comes through on October 1st? Or are they going to go out into the property market? Now that the power is with the buyer, are they going to go out and buy more property? Or are they going to put it into other finance companies or banks? That's a question that many people in the banking scene, economists, people in the property market are thinking about today in the aftermath of the receivership of South Canterbury Finance. Now there's a couple of choices here. For people who are worried about the security of their investment, about making sure they get back the capital, let alone how much they earn, then they'll be concerned about security. They'll be looking for a government guaranteed investment or something with a very high credit rating. Now that may involve some of the big banks or some of the finance companies that still have a government guarantee. Now some of those finance companies are guaranteed until the end of next year, whereas the banks are not likely to take up that extended guarantee, although of course they have very strong credit ratings, and the big four banks are seen amongst the most highly rated banks in the world. Or you could buy government debt. This is the interesting thing. This $1.6 billion is actually coming from the government raising money in the wholesale markets by issuing bonds and treasury bills. What we're actually going to see overall is a repatriation of foreign debt. Let me explain. The government is raising money from the international and local wholesale markets. They'll then be handing it on to New Zealanders. And to be fair, I think most of it will go back into the big four banks. The big four banks, though, fund most of their, well, a good chunk of their lending, around 40%, by borrowing from international markets. So what we're seeing really is a transfer of debt from the banking sector to the government, and in theory, reducing the cost. It also will help the banks as they look to move some of their funding from the hot wholesale international markets to the local term deposit market. And in the end, that's probably a good thing for New Zealand. It reduces our overall cost of that foreign debt because government debt is generally slightly cheaper than bank debt, and it also reduces the bank's reliance on that hot wholesale foreign money markets, the ones that froze up after the collapse of Lehman Brothers. Now, whether it gets put into the property market is another thing. We saw First National come out today and say that it could go into the property market and this could boost prices, and that also the banks with a little bit of extra funding would look to lend it into the mortgage market. Not so sure about that. I think the banks are going to be a lot more cautious, as are people who are borrowing. We'll see then what happens to this $1.6 billion windfall from the South Canterbury Finance receivership. I'm Bernard Hickey. That was a special investing report brought to you in association with Bank of New Zealand. And again, those are my personal views.